Hey everybody, it's Chuck Barone. Friday, September the 1st. Holy crap, a new month. Time's going by so fast. Oh my God, it seems like we just started a new year. It was spring and now boom. It's just, everything's going. So I guess the older you get, the faster time goes by, right? And here we go, September the 1st. It looks like we're not going to get any relief from the crazy. Because these markets today showing us that even though it's a new month, it's the same old crazy. Anyway, before I get rolling today, let me welcome all of you guys to the show. Thank you as always for your support. You guys showing up every day and watching the videos, being here, being a part of this show means the world to us, guys. We really appreciate you. All right, so let's talk about markets today. We knew today was going to be the big one. A lot of data coming out today. The big thing, of course, being the August jobs report, the non-farm payroll report. And the number came in pretty much right where they expected it to come in, a little higher. But the market kind of not reacting. I don't know. You tell me what you think of these reactions. Listen to this, guys. Stock market today, mixed. The Dow jumps 115 points. The S&P goes up 8 points, while the NASDAQ falls 3 points. So pretty much a big nothing burger today in the stock market. Nothing happened. The bond market, well, the 10-year jumps 8 basis points, 4.17%. The 2-year jumps just 1 basis point, 4.87%. So now we got that narrowing of the inversion again at 70 basis points. Seems like the 10-year is going up faster than the 2-year now, which is odd because you still have that inversion with short-term rates higher than long. So we have this stock market and this bond market just looking like they have no idea what's coming next. So they just move day to day, depending on the data that comes out that day. And I shouldn't even say the data, their interpretation of the data. Now you guys are going to have to forgive me today. I got a cold coming on, so I could be sneezing, I could be having the sniffies, I could got the sore throat going, but I wanted to get this video out today. So forgive me if I'm a little, Anyway, so stocks and bonds, the market, massive uncertainty, no idea, none, which direction they're going to go. Waiting again, like I say, on interest sensitive, data sensitive, and directionless right now. And that's not a good way to be in the stock market or the bond market. The dollar today jumps up again, man. The dollar is super hot lately. Back up over 104 on the index, 104.26, dollar strong. I mean, I didn't see much news to make you think the dollar would go up today. The market's kind of feeling like the jobs report today is enough for the Fed to pause and not raise rates. You would think that would put pressure on the dollar. Instead, in the usual typical mixed signals, the dollar jumps. So big dollar, pressure on gold and silver, but gold manages to eke out a gain today. Gold up 50 cents per ounce, $1,940.10 for an ounce of gold. While silver falls 25 cents, $24.15 for an ounce of silver. I tell you guys, these numbers are good numbers for gold and silver. Not quite to the peak that we hit earlier, but pretty close. And in the face of this dollar, a strong dollar, holding their own, man, a good encouraging sign, because sooner or later this dollar is going to come back down to earth, man. And when it does, you're going to see a big pop in gold and silver. Oil today, still flying high, kicking my butt. I was waiting for it to start coming back down. Now it just keeps going up, up, up. Up again today, $2.28. Now sitting at $85.91 for a barrel of West Texas Intermediate. I can hear them changing the numbers on the gas pumps in town here in Vegas already. The number has been all over the place. Oil had been in a trough, trading between 70 and 75 for quite a while. Broke out several times above, came back down, broke out several times below, came back up. So when it broke out again, and it was above, I think it was around this number just a couple of weeks ago, I was feeling like, okay, we need to keep a better eye on oil. Maybe we're reaching a new trading number. And we'll see if now it's going to be between 80 and 85 instead of 70 and 75. We're going to keep an eye on this and try to get in, we're plotting these every day, keeping our records right. So we'll get a better idea of where oil is going to go when we have a little more price pointing. Is it going to be able to support a number like this? I have my doubts, but we'll see. Bitcoin today continuing sinking, down $496. 25,622 for Bitcoin. A lot of mixed news on Bitcoin, good and bad. Tough market, but Bitcoin holding its own. So all in all, if you're a Bitcoin holder, you got reason to be encouraged. If you're not a Bitcoin enthusiast, well, it doesn't really matter then, right? All right, anyway, so there's those markets in a nutshell. Just silliness today. I really thought the jobs report would move these markets. It just didn't. So let's talk about this jobs report. Okay, this is the department, government reporting this every month. They call it the non-farm payrolls report, Department of Labor. This month's report for August showing 187,000 jobs created versus their estimate of 170,000. So the number coming in hotter, even though not by a lot. Still hotter than what they thought. Just like yesterday with the inflation numbers. Coming in not oh my God, hair on fire hot, but hotter than they thought. So these numbers not working out to the advantage of the interest rate doves, but nonetheless, they claim victory anyway. So I guess they're looking at last month's numbers revised down from 170,000 to 154. And even with this report showing 187,000 jobs gained, the unemployment rate jumps from 3.5 to 3.8%. Now the market is taking this as a very good sign. The jobs market is not as hot, the inflation's cooling down. The only thing that markets want to hear is that the Fed's done raising rates, or they're going to start cutting rates. Good luck with that. But this is more, they're interpreting this as more proof that they're on the right track. The Fed likely not going to raise rates. They really believe that no rate hike in September, and likely not again this year. I still say there's going to be at least one. I still think September is going to be the month. We'll see, though. I mean, the Fed, I guess, doesn't really matter the way I interpret the data. I'm seeing that, I feel like I'm seeing things pretty clearly here, but it's all about how the Fed interprets this data. I think, right now the biggest fear the market has is that the Fed's going to go too far with rate hikes and cause a big recession. It doesn't seem to be the case. And even, when you're talking about going from basically 0% to 5.35%, that's just a massive jump in a very short period of time. And the economy kind of taking it in stride here, right? I mean, it's amazing. Now, the job market cooling off, they're looking at okay, the Fed doesn't have to raise rates in September. If this number would have came in really hot, we would have changed some thinking. And what the market's waiting for, obviously, just like every mortgage guy in the country is waiting, is for not only them to stop raising rates, but to commence bringing rates back down so people can afford to buy houses again, right? So we'll see how it all shakes out. But I got to say, it looks to me, guys, like we are nowhere near out of the woods here. The Fed needs to see big numbers. They need to see 285 on the unemployment numbers. We're not anywhere near that. They're always shortchanging the estimates on monthly employment. Inflation now, core and top line, both ticking up from lows 2 months in a row. But the markets want to say this is great news and everything's good. Well, I'm going to have to say I politely disagree. A couple quickies. Regional banks getting hammered. Man, I feel bad for guys involved in these banks, stockholders and the people that work there. Government regulators coming in from the FDIC, Treasury, Federal Reserve, imposing some pretty stiff new rules on banks. What they're trying to do is prevent more bank failures like we had with Silicon Valley and Signature and a couple of others. So basically, what they're calling for is stricter enforcement on regulation and, of course, increases in capital requirements. Banks scream bloody murder, they're going to lose out on profit. Of course, so are their shareholders. I was laughing. I said, well, we can all feel so much better now knowing that these government knuckleheads are looking out for the banks and the taxpayers, because they have such an amazing track record doing that, right? I mean, I try not to get discouraged every day, but, you know, regional banks are going to have a big explosion when this commercial real estate thing blows up. And looks like the government trying to get in front of that a little bit. We'll see if it works. I doubt it. Interesting, I was reading today, foreign investors dumping China, running like the wind out of China. More than $12.4 billion yanked out of China by foreign investors just in August alone. It's about 5 straight months of big withdrawals from assets in China. China now starting to consider putting some limits on, making it more difficult to bail, not only from investments, from if you have businesses there. They see the writing on the wall where things are going. They want to preserve that business. So we'll see how it's all going to work out. China's in a tough spot, even worse than we are. And, I think that this could, we're already creating this huge friction with them on everything. It's just going to add more fuel to the fire, putting big pressure on the authoritarian government in China. I think that, they get to boss everybody around pretty easily, but I know it doesn't seem like the economy is not their priority. The ideology is. So we'll see how things continue to go in China, and how things, if they decide to put controls on, what those look like and how foreign companies and investors react to those. Also, construction spending. Wow, man. Construction spending jumping. Boom, man. Builders, I've been telling you guys on the show many, many times, there's no supply of existing housing. People refusing to sell their houses. They have 3% mortgage. They sure as hell don't want a 7% mortgage. So no supply of existing housing. Buyers stampeding toward new builds. Builders lapping it up, man, raising prices. They used to have huge incentives to buy from a new builder. You get granite countertops, you get closing costs, you get all these different perks, upgrades. All that's gone. Raising prices, waiting lines, and a big pain in the ass. Builders loving it though, and their profits are showing on Wall Street. And last, I was reading an article that really made me sad. It was saying the American dream, they didn't use the phrase dying, that's what I'm using, but they said the American dream is changing. The American dream, we all know, used to be a good education, a good income, your own house, a retirement, a decent car, just a normal middle-class good life. A good middle-class life was considered the American dream. Well, so many of these young people today feel like they got no shot at that dream, especially the house with the white picket fence part. So now they're changing what their definition of the American dream is. And listen to this stuff, guys. You're going to love this stuff. They said, the American dream is to live comfortably. What the hell does that mean? Live comfortably. Other responses? Feeling happy in life. Really? Freedom to follow my passions. You already have all of that stuff, guys. And the freedom to follow your passions. As long as your passions are profitable And if they're not profitable, you'll have to find a way to support yourself, but it doesn't stop you from pursuing your passion. Being happy in life? Well, I would propose that having more money, not less money, it can't make you happy, but it's certainly not going to make you more unhappy. And there's a million ways to make yourself happy, man. You know, I'm an animal lover. I donate money and time to animal shelters. How about that? Taking care of your family, doing it proper, seeing them progress and grow as people. How about that? Doesn't that make you happy? How about learning and continuing on with your own life? Doesn't that make you happy? And this whole idea of living comfortably, well, that's subjective, man. Every person got to have a different idea of what in the hell that means, right? So I don't know. I think that they said that to live comfortably, you would need to have an income of more than $68,000 after deductions, after taxes and everything else comes out. So basically you got to have more than $100,000 of income to live comfortably. And a lot of people that make less than that live very comfortably. So this whole idea, I got to call phooey on it. Anyway, guys, I've been windbagging enough today. Over 16 minutes, dang. But we'll be back on Monday to bring you guys the news you need. Another exciting weekend. Another exciting week next week, but a weekend first. Pouring rain in here in Vegas today. Going to be kind of a crappy weather weekend, but we're going to survive it. No NFL this week. Go College. We'll be back on Monday to bring you the news you need. Until then, guys, take care. Thanks.